Hey, g'day, Rudy here. So this video is all about shares with good looking charts, meaning good growth prospects, dividends over 5%. But first of all, I thought we'd go through just the interest rate outlook. So what we're looking at here is monthly charts, so every bar is a month. Australian 1-year government bond yields. So we heard on Friday, Powell has set the scene for lower interest rates in America now. So this is ours. So we can see we're really in 2022. For those that haven't seen this chart, so 2022, the 1-year bond yields broke the downward wedge there, which is a bullish chart pattern, and they've run pretty hard up to 4.6, and now they're pulling back into this range, sort of 3 to 3.5. If we go to a weekly chart, so you can see we're in a bit of a bias to the downside, you would say, but longer term, that's forming a bullish chart pattern, a declining wedge, another one of these. But for now, it's lower for longer. I don't believe inflation's under control, but anyway, I think the governments all around the world are just going to drop rates to lower their interest rate costs on their debt. Okay, so Aussie 10-year, same sort of pattern. We broke 22, broke the downward wedge, or channel probably more, and formed a bullish pennant up into a bullish flag now. So you can see long-term rates haven't really budged if we go to a weekly chart. So even though, so you can see the lower rates are going down, but 10-year rates are actually even more, like they're just budging. And it's exaggerated when we put the 10-year over the 1 year. Okay, so you can see there, that's a bias to the upside. So long-term rates are going up a lot compared to short-term rates. Okay, so just park that in the back of your mind about interest rate outlooks. Okay, onto the shares. So we start with a good one, actually. I'm just going to go in alphabetical order. Atlas Arteria, so global infrastructure on toll roads, 7.5%. Chart looks fantastic. Declining wedge breakout, so break, test, and it's higher lows and about to make higher highs. So put that on your radar. ANZ, so that was, if you're familiar to my channel, I don't really love banks, but ANZ was the preferred bank, buy back here. So the div's probably gone down a bit since that, I haven't checked, but anyway, if you're going to buy a bank, my preference is ANZ. Actually, if it's getting pretty close, go to a monthly chart. You can see the all-time highs up here. It's probably going to try and put its eyes on that. But that looks pretty bullish. APA, so gas pipelines, break from the declining wedge here, and a buyout back here. So that's forming a nice bullish pattern. 1, 2, 3. The next level of resistance is, so it's sitting on its level of resistance, so that looks fine. 5.2. Horizon, so they're the Australia's largest rail freight operator. So they've broken through the down trend line there. This is now, you see it came down and tested support here. That was a pretty bad candle last week. It basically went up, started here, went up, went down, But it looks like if you can pick it up around 310, 320, it's got a good thematic there. So not the most bullish of charts, but just putting it out there. Beach Energy. So go to a monthly chart just to get a bigger picture. So you can see we're down at the 2020 lows. Oil price. Actually, at the end of this video, I'll leave if you haven't seen it, my King MVR ETF gives a good summary of all the resource commodity prices and stocks. So that looks like a good place to 7% div. It's not bad. And pretty much buying at the bottom. It needs to get through here to prove itself. Dicker Data. So these are wholesale IT wholesalers. 3 billion in revenue. Two owners own 60%. That's why the dividends so high. We've got 5.2 there. But I don't mind the thematic. Increase in AI products that they can sell. Broken the declining wedge. Broke, consolidating. Don't mind that. Had that as a buy. Elders. So they're 5.5. So agricultural providers. It's interesting, that one. I don't know if they've reported or not. So, but if it can, the more it, it's line. It'd be nice to see it just. We can see there's a gap here. So a trap is they fill the gap and then it falls away. So, but keep it on your radar. Fortescue. So iron ore prices are starting to pick up. 7.3 div. They've broken through a few downward. So they're in their up period now. If they can make money with iron ore being where it was, as the iron ore price goes up, they'll make more money. This one's a 12% div. GQG, they're a fund manager. Obviously not capital intensive, just a bunch of people picking shares. So they're right on support. Not a great fan of fund managers when you can buy an index fund that they say outperform active fund managers. But it's certainly at a nice level of support to buy. So I just thought I'd throw it in there. IGO, so they're world's cheapest lithium miner, plus they got a bit of nickel, copper, cobalt. They got a refinery business which I'm not keen on, energy intensive. But anyway, a div of 7 has formed a bottom. I reckon if you can pick it up around at these levels for 80s, it's probably not a bad area. I had to buy back here. Who else we got here? Okay, IPH. I had this one last week, so I did a 6.5 div. I did say I'm not great in the IP services, so it's a bit like an accountant, really. Just, well, in simple terms, it's man hours is how they make their revenue. But it did break the wedge, declining wedge, so they must have had a shocker. So, but if we can find support around here, it's paying a good div. Div would have gone up a bit since then. Anyway, I had it in the video, so I'll keep it there. Karoon, so they're oil and gas. They looks very nice. It's broken the down channel, broke down, finding support. So 6% div. So that looks alright. Lindsay Australia. So they're paying 6.6. So they've done a bit of hard work in breaking the downtrend, but it just needs to do, well, it definitely doesn't need to fall anymore. Just needs to do a bit more. Actually, was there a gap? No, sorry. So that can start looking a bit more green candleish, so that looks good. Trucking business. Macmillan Shakespeare, so there's salary packaging. I think all the government employees, you go and bundle up a car and your pre-tax income and whatnot. 9% div is pretty attractive. It'd be nice to see them maybe pull back a bit and add a bit of green, but yeah, it's there. New Hope Corporation, so coal miner. My favourite of coal miners. It's definitely the lowest cost producer in Australia, and in the top quartile in the world, I think. So they're paying a 9% div with low. Again, there is coal at low prices, still making money. I expect coal prices to go up with those 3 billion people in China and India that want it. Okay, I'm a gold bug, so I have to put. So Northern Star is a gold miner. It's nearly 4.7, but I had to put it in because I love gold. So it was actually had a buy down here, but it's consolidating at this resistance level. So if you don't have any exposure to gold, Northern Star is a nice way to get into it. And they've been increasing their dividends over the years, which is one of those things people say. Now RFF, that looks really nice. So they hold a whole bunch of rural real estate, leasing and whatnot. 6% div. That's a buy tomorrow. That's going. No more to be said. Okay, Rio. So I think their div's around 5 or 6. Again, like Fortescue, so a bit lower than Fortescue. But I'm pretty bullish on iron ore prices now. And you're not buying at highs or anything like that. So good, solid blue chip. Spark. So this is the Telstra of New Zealand. Div of 10. You can see they've been punished. Well, they're trying to come back. You don't want them to fall over. I've always been saying this one, it just needs to do a little bit more, get some green in there. I mean, the div is 10, so even if ideally you want it above this 250. If you pay a bit more, you get less dividend, that's alright. Alright, the King, Woodside. So div of 7, looking absolutely wonderful. So it's been punished, broken the down channel, formed a new broadening wedge here, sitting on. We've got a lot of subscribers. I don't want to pay. Can it wait for it to come down? No, I don't think you're going to get it cheaper. You're going to have to pay up. Or the other option is this MVR ETF, which, if you're familiar to my channel, have now called the King. It's basically, if you don't know, it's got Woodside, so like an 8% holding to Woodside, BHP, Fortescue, Rio, Santos, Origin. There's about 30 of our top miners in it, all sitting in the one ETF. And the div's probably 4-ish, because there's some companies in there at the smaller companies that aren't paying big fat divs. But still, it's diversified. And there's now just had a rest last week. I reckon this week it's going to go. And I know this is the popular ETF in Australia, VHY. It's basically got the opposite ingredients. It's mainly full of banks. So I think its dividend yields about, so CBA is a big holding and it's paying what, 3%. So it's probably 4-ish too. Does look more bullish. If we compare the pair, so this is VHY outperforming MVR, and then MVR outperforming, VHY outperforming, and the charts are saying we're going to be back in for this type of move. Last week wasn't very good because the banks run and the miners didn't. But if this was the chart, because this was resistance here, what you're looking for is it to come back down here, get a bit of support, a bit of green, and then I reckon it'll take it out. Alright, if you've got any ASX300 stocks or ETFs or that you reckon better, please share. Don't be greedy. Otherwise, let me know your thoughts. See ya.